What's up, stock compounders? Brad here. So today I want to get into SuperInvestor Performance. Okay, you all know I am a shameless cloner. Okay, one of the favorite things for shameless cloners to do is identify other great investors that have a proven track record. They've been crushing it with performance. And that's a fantastic place to get new ideas for companies to dive into in terms of adding to the portfolio. So today, I want to show you guys what I've been working on. I finally got inspired to really dive into this after my Q&A session. Someone asked me, what mistakes have you made with investing? And one of the mistakes I've been making is putting this off, not doing this sooner. So I figured, well, let's just dive into it. And I want to give a big shout out to Enrico on Twitter. Okay, he really inspired me to start spending some time doing this. I think it was a month or so ago. He started this project of compiling great investors and what their annual returns have been, how it's compared to the S&P 500 over that time. So check out what he's doing on Twitter. If you scroll down, there's another format here if you prefer this one, the old bar chart. But we were really both inspired by this chart, okay? I don't know where this chart comes from. I know Tobias Carlyle has referenced it in the past, but this is so cool. So you've got a number of years, right, that these investors have been investing. They're not all current investors, certainly. A number of them aren't even alive anymore. And on the y-axis here, it shows the annual outperformance versus the S&P 500. So it's relative performance to a benchmark like the S&P. I just love geeking out over this chart. So I hope to create something similar to this once I have all of the information together that I'm looking for before spending the time to put a chart like this together. But let's dive into the project underway. Now, one difference I want to note here, and I kind of mentioned it already, Enrico is really compiling performances from investors that aren't necessarily investing anymore, okay? As a shameless cloner, that's not particularly useful to me, okay? I want to be looking at what investors are doing that are still investing. Okay, I don't care about the performance of investors that aren't actively adding stocks to their portfolios anymore. So what I've decided to focus on, I'm only looking for investors who are currently active in investing. Okay, so a lot of this just came out of making lists over the last couple of years, investors that you guys have pointed out, investors that I've kind of come across on Twitter and other places. And this is really just the start, okay? I really need your guys' help. If you have investors that aren't on this list and they've had great performance, hopefully for more than 15 years, to include 2008 in the mix as well, let me know. Hit me up. Send me a direct message on Twitter. Help me really build out this list of great investors to look at what they're doing each quarter for the purposes of shameless cloning. So let's quickly get into what criteria I'm looking for with this list. I already mentioned have to be actively investing. Now, it is important to me that it's at least a dozen years, hopefully 15 years or longer. And the reason for that is if you've only been investing for 3 years, right, or you've only been managing a fund for 3 years, like Andrew Rosenblum, it is very difficult to tell how much of this performance, right, 76% annualized returns, insane, just a crazy number. It's very difficult to tell how much of that is from skill versus how much is using leverage or just riding this crazy bull market that we've had. If we've got one or ideally two market crashes in the mix, you can really see who's swimming naked here, who's really applying leverage to produce this outperformance as compared to a benchmark like the S&P 500. So, 3 years, you're not going to be able to gauge much in terms of skill in 3 years. I still really like Andrew Rosenblum because I've read his letters to investors. I can tell he's just a smart guy. He's really thoughtful about his process. But if you're looking for return numbers as an indication of skill, you really need to have a bit of a track record to look at. So that would be ideal, having more than going back through 2008. All right. And it's kind of interesting. A lot of these track records start in 2008. I get curious about things like that. When investors start, the fund, the inception of the fund is in 2008 or 2009 or 10. It's like, were you investing before that? Did you decide to start over because you got destroyed in 2008? I don't know the answers for these investors who have an inception year in 2008, but it gets me very curious about that. So anyway, you can see here in terms of the annual gain, the annualized gains for these investors, I've got the start and end date where these numbers apply to. And the vast majority of these I got from just looking at letters to investors from these investors. A lot of them make those letters public. They disclose their performance in the letters. And so that's where I got most of this information from, just one at a time, looking up, reading through the letters. Usually right at the beginning of the letter, they talk about fund performance, but it's not a fast process, unfortunately, or maybe fortunately, because there's not that many people who are going to do this. Could give a bit of an edge, right? If you're really got your nose to the grindstone, compiling a great list of people to shamelessly clone, there could certainly be an information edge there. And of course, Pabrai is always talking about how there's an edge if you're just willing to be a shameless cloner, right? If you can set your ego aside, there are very few people who are willing to do this, okay? So there's a huge edge right there. We've got assets under management as well. And the reason that is important is, if you're managing $627 billion in assets like Warren Buffett and Charlie Munger with Berkshire Hathaway, that's going to be a significant drag on performance, okay? Because you can't invest in the small and mid caps. You're really limited to the bigger end of the large cap public companies. So it's just much harder to find mispricings when you're limited to that kind of universe. And you can see 20%. This is 55 years of averaging 20% returns for Berkshire Hathaway. It's just insane. I don't think there's ever been anything like this, okay? And that's why Berkshire gets, so much attention. It deserves that attention. But in recent years, it hasn't been 20%. It's probably been closer to maybe 10 or 12% over the last couple decades, if I had to guess. But, I just put this in here because it's incredible. I mean, that is just a remarkable, long, impressive runway for Berkshire Hathaway. But so that's why assets under management are important. And then down here at the low end, you've got Rosenblum with Bonsai Partners, Matt Peterson with Peterson Capital Management, with just getting into the 9 and 10 million AUM. So much smaller, obviously, than something like Fundsmith or even Pershing Square, Sequoia Fund. So there's a very large range of fund sizes in this list. What else do I want to say? So, a few notes here. Terry Smith, a guy I've really gotten into lately. He wrote Investing for Growth, fantastic book. I got this book recommendation from Monish Pabrai. There's two Fundsmith funds in this list, right? There's the Fundsmith Equity Fund, which is kind of the flagship fund for Fundsmith. And there's also, there's multiple funds within Fundsmith, but these are the two that interest me. There's one called Smithson. Okay, Smithson focuses on small and mid-cap stocks. Okay, it's like Fundsmith for small and mid-cap stocks, and it's managed by Simon Barnard. Now, it's only got less than 3 years of performance behind it, but 26%. Love that number, right? That's doubling your money every 3 years. That's an incredible number, especially if you can do that over the long run. So what this tells me, over the course of this fund, right, they've about doubled assets since inception. So, and we're right around 4 billion for Smithson. So this is what I'm going to be watching very closely. Small and mid cap that kind of meet the criteria that Terry Smith has laid out, which to me is it's a very intelligent way to go about identifying great businesses at reasonable prices. That's really the framework at Fundsmith. Of course, you have Prem Watsa in here. Connor Haley, look at this, 84%, okay, over 3 years. 84% annualized over 3 years. Now, this is a large enough fund to have to disclose 13F filings. I've never seen a 13F filing for Altifox. It might be a fund structure that they're not required to disclose. I have to dig a little bit more into that. But Connor Haley is fairly transparent about, I think every quarter they put out a new letter to investors. And I think usually in those quarterly letters, they disclose a new holding and kind of dive into the investment thesis behind that new buy. So definitely more intrigued after doing this to really keep an eye on Altifox Capital. This is very exciting, guys. I'm very glad that I spent the time to do this. The one discouraging thing, a little bit discouraging, there's very few in here that include, the full experience of the global financial crisis, right, back in 2008. You've got Bill Ackman, right, going back to 2004, 17% annualized over 17 years. That's a very respectable performance by Bill Ackman. And I love how concentrated he is, right? I think he's got like 7 or 8 holdings in the public equity portfolio. So very easy investor to clone. So Bill Ackman, very strong. Monish Pabrai, back through 2000, right? Pabrai basically started his fund during the dot-com bubble, sort of on the tail end of the dot-com bubble. So, 12% over 21 years. He started out gangbusters, right? In his own portfolio, I think from 1995 to 1999, he 13x'd his money, right? From 1 million to 13 million. Did very well, I think, the first couple of years of Pabrai funds. 60, 70% per year for the first couple of years. It's been a bit of a slog since then, especially when you're comparing to how the S&P 500 has done. So I'm hopeful, personally, that with this new approach, with this spawners approach, this focus on compounders, instead of the dollar for 50 cents, we're going to start to see more impressive outperformance for Monish Pabrai moving forward. That's really what I'm anticipating personally. Sequoia Fund, another just incredible story. Over 51 years, 14% annualized returns. Okay, that is very strong for that length of time to be generating that kind of return. So, and then Prem Watsa, 15% over 35 years, known as the Warren Buffett of Canada. Strong performance. Again, you look at these newer funds, kind of within the last decade, some of them are just crushing, right? You've got Bonsai Partners at 76%. You've got Hayden Capital, just 7 years, but 34%. That's almost a double every 2 years at 34%. Again, Alta Fox, mentioned them already. Greenhaven Road Capital, Laughing Water Capital, NZS Capital, right? This is a very short time frame, a year and a half. So still strong, but I need to know a lot more about what their framework is to get comfortable with NZS Capital. And Saga Partners, right? 4 years. Again, not a super long track record, but 39% definitely intrigues me to look into what they're doing. And just today I took a look at this letter from Joe Frankenfield. Very thoughtful investor. Right away I can tell that. So looking forward to spending more time with Saga Partners. So again, guys, this is really a call to ask for help. I haven't been able to find letters from these investors. I think maybe they only share them with current investors. So if you guys can help me out with any of the numbers here that I'm missing. I think I also want to include, the Twitter handle. A lot of these investors are on Twitter, right? They're active on Twitter, which is a phenomenal resource to potentially interact directly with these fund managers. Also, I'm thinking about putting in a column for conviction, right? How many stocks are in like the top 50% of the portfolio? How concentrated are these investors? That varies widely as well. I mentioned Bill Ackman having, all of the fund's assets in like 7 companies, 7 or 8 public companies in terms of the equity portfolio. So I think that's something I want to include as well. But again, if you guys have any suggestions about what would really strengthen this spreadsheet, this SuperInvestor Performance spreadsheet as a resource, I am definitely open to suggestions there. We could also include, what did the benchmark do? What did the S&P 500 do over these periods that we're looking at these investors? So each one would have a different kind of benchmark to compare to. I'm not so interested in that. I'm really interested in absolute performance as opposed to relative performance compared to a benchmark, because at the end of the day, you can't really eat relative performance. Okay, how quickly you get to the promised land is determined by your absolute performance over a long period of time, right? That's how compounding works. You really need to do it over a long period of time. So, I don't care too much about the relative performance. But again, if any of you have suggestions for additional columns here or other investors that you're tracking, hit me up, DM on Twitter, or leave a comment on this video. That would work as well. Don't put any links in the comments, because I think YouTube will automatically exclude that comment from showing up. But I would love to see a link if you're sharing, a particular investor, how long that fund has been going, what their average annual return has been. I would love a link to the actual letter to investors or source that you got that information from, just so I can have it all here.
so people can cross-reference and just double check that the numbers are accurate, right? Because we're playing with spreadsheets here, and it's easy enough to have an error, have a number that's off. So it's important that we can, cross-reference all of the data here. So anyway, guys, with that, I will leave you. Thank you in advance for your contributions to this project, and it's going to be fun. I will see you all in the next video. Take care.